Thank you, everyone, to be here. I will start by introducing our panelists. So first we have Mr. Yves Choueifaty, which is the CEO of Tobam, which is an asset management company, which was the first to provide an exposure to investors to Bitcoin. Dr. Idriss Aberkane, you already know him. It's an international speaker, government advisor, and he already gets 3 PhD in neuroscience also, so he has a good background to discuss about Bitcoin. We have Joseph Collement from Bitcoin.com. He's a board member of Bitcoin.com, so it's a pure Bitcoin maximalist. And we have here Pierre Krajewski from the Institut Rousseau. This institute has already shown that they don't believe in Bitcoin, so is the negative and conservative person we have here, and I expect from all the panelists we will be ready to discuss about it and allows you to understand if Bitcoin could be a good coverage in this current situation. First of all, I think we need to explain what is inflation and why it's so important to have an hedge against inflation. So perhaps I will ask, please, to Mr. Choueifaty just to explain us, just basically, really quickly, what is inflation and why is it so necessary to have an hedge against?
Initially, the idea was to measure the power of purchase of the currency. A currency was issued more and more, and its power of purchase tend to diminish across time. What is very interesting, it is that I am a statistician by background, and my alma mater is INSEE. It is an institute in France that computes inflation. So in the beginning, inflation duty was to measure the cost of living, and in fact it evolved across time into measuring the evolution of the price of some consumers' goods. And very funnily, the inflation we know, the inflation which is published on a quarterly basis, measures in a very imperfect fashion the cost of living. As an example, in France, for instance, it's nowadays a well-established fact that the biggest part of the budget of a French citizen is, in fact, the government expenses. So if you look at France, for instance, the expenses of the governments in 1958 were 22% of the GDP. 2 years ago, it was 62% of the GDP. And despite that, the impact of the government expenses on the inflation was zero. Because the inflation, as it is computed today, does not take into account the cost of the government expenses. The second line of the budget of a French citizen is real estate, sheltering. And here as well, you know that consumer price index does not take into account properly the function of sheltering. So if we wanted to discuss about inflation, we need to really distinguish between really cost of living and the way some statistical institutions measure inflation. There is really a hiatus between the two of them. It is now relatively well admitted that the cost of living has been up for a long time, and it is impacting the consumer goods on a relatively recent basis. Why? Because of the fact that we have delocalized the manufacturing of most of the consumer goods, and it is those productivity gains that have artificially hidden the impact of monetary inflation into the prices of the consumer goods.
So it means that inflation reflects and illustrates the purchasing power of companies and citizens. So the role of the central banks is really, really important to protect this inflation. So I would like just open discussion and debate about it. So do you think central banks can use various tools to protect the purchasing power of citizens. Does the European Central Bank already done what is necessary to protect it, or does ECB is responsible of the current situation? Do you think, guys, for example, Idriss, do you have any opinion regarding the role of the central bank in the current inflation situation we are?
Well, I'm a Bitcoin maximalist myself. Works?
Le mien fonctionne.
Right.
Le mien fonctionne.
From a philosophical standpoint, I would say I'm a Bitcoin maximalist myself. Does it mean in terms of investment, I don't invest in other cryptocurrencies because I do, sorry. But from a philosophical perspective, I'm a huge defender of proof of work. When it comes to the last resort, I don't mean I'm attacking proof of stake cryptocurrencies, because again, I'm not. But as a safety of last resort in terms of distributing trust, I really think this is what central banks should be doing. So we live in a period where we've been printing too much money. Everybody knows that. That's the very reason Bitcoin was invented, was that the people could not control the money supply. The money supply, you don't vote for it. There's no way the people can control the money supply right now, which is a problem when you think about it, because in the classical theory of power, you've got the executive, the lawmaking, legislative, and the judiciary. But actually, you've got other forms of power, and the monetary power is almost ultimate in the sense that it can have so much leverage on all the other forms that it should be in the hands of the people, and it's not. Factually, it's not. There's no situation where the people is going to vote on the inflation, on the money supply. But there's no situation in which the people would vote on Bitcoin either, right? It's just been written in stone, and you can't change anything about that. But it's creating a new level of trust, because you know you can't mess with it. You know there's no way you can change the Bitcoin money supply, and that was a big innovation in the early 2010s. Intellectually speaking, it was a big innovation. So, of course, I do believe there's too much cash around, but the market has kind of absorbed some of it, you know, especially with stocks. Right? We had a huge stock bubble. The world economy was collapsing in 2020, but still stocks were rising. And they were rising because we had printed so much money. And now we can't, there's no way back, as you know. We can't really stop printing money right now because the shock would be awful. But I'm part of the people who believe we should do that. And we should, you know, diversify our monetary solutions so that when we start printing less money, it becomes more acceptable for the economy, and it's not such a shock. So that's my personal opinion there.
So do you think, regarding Bitcoin, that Bitcoin could be a new form of money? Because with the current evolution of the price itself, does allows any citizens to use it as a payment system instead of investment?
So I think it's crucial for the audience and everyone to really understand the impacts of inflation, and it's no longer, you know, something happening in Argentina, something happening in Venezuela, Turkey, Lebanon. To go back to the definition of inflation, I'm not an economist, but my understanding is that it refers to the decline of the purchasing power. And so in terms of being measured, how it's measured by the government, I know I'm not sure in France, but I believe they also use the CPI, the Customer Purchase Index. And in the US, they use that, and it's proven that the biggest expense for people living in France, in the US, is housing. And in the US, they have a way to measure the CPI where they actually exclude housing expenses. So I think the latest figure of inflation year to year in June was 8.5% in the US, meaning that you guys, in France it's about 5%, but so in France you guys lost 5% of your purchasing power based on last year. And if you look at you know, other countries, more than 1 billion people live in countries that have double-digit inflation numbers. So 10, 15%. We talk about hyperinflation when it's over 50% inflation year over year. At this point, it becomes crucial for.
Yes, you looks like to have another opinion that when I'm looking your face, say, okay, yeah, I don't believe in it.
Yeah, can you hear me? So I just wanted to come back to the definition of inflation here. Still out? Okay. So inflation is actually measuring consumption prices. And that's why we have, I agree totally on the fact that it poorly measures the purchasing power because it only considers consumption power. So in France, when you make the average of people housing expenses, actually people who buy their houses don't consume their house. You just take the rents. When you pay your rent, when your wage is in the consumption price. But when you buy a house, people who bought their house are considered as expensing nothing. So that's why the consumption price may be rigged somehow. But that's it's obviously something to work on, I guess. But we don't have any better measurement today.
So I disagree because if you look at least in the U.S., you have millions of data points with private companies like Zillow. I'm sure in France you have like Meilleur Agent. They track like the price of real estate like literally on a daily basis. So the government they have the means to access those data points. I think they just refuse to do that because if they implemented the statistics, then the actual inflation rate year over year would be much, much higher than that. In the US, it'd be approximately 15%. In France, it'd be at least 10%. If you look at the price of real estate in Paris in the past 5 years, like over 25%.
Paris is only 20% of the French population, so of the Parisian region. So it doesn't. The problem with inflation, it's an average. It's an average, so it won't reflect the situation of every individual. So when you take averages, it's always like that. So coming back to the point, is it actually a problem that there is a high inflation? Of course, if we look at some extreme examples, such as Argentina or Venezuela, there are some problems because people cannot save anything. They just must consume immediately what they're gaining. But actually, if you think of inflation just as a way to redistribute purchase power, it could be a way to redistribute also democratic power. If you look at some other places, just like the USA, the democratic field is rigged. So the democratic debate is rigged because it's proportionate to the purchase power of the candidates. Not the purchase power, but the sponsors that they have. So the amount of money that they can grab to sponsor their, but that's another topic. But what I wanted to say is basically that inflation is just a way to redistribute power, the purchasing power. So if you create money and redistribute this to the people, and that's sort of what was done in France during the pandemic, the wages were taken were taken care of by the French government. So if you could not work because you had an on-site work and you could not go on site, your wage was paid by the government.
So just, I'm sorry, I'll give the...
Yeah, please.
Just to rebound on this, but I would argue that inflation is not the distribution of money equally, because if you look at the assets that are the most inflated, you're looking at the stock market, the way it rebounded after COVID is absolutely insane. If you look at real estate prices, like this, essentially, there's something called the Cantillon effect, and it's whenever the money printer goes brrr, I don't know if you know the expression.
But you didn't get the point about the answer. So why we can have any alternative to the current monetary system, which puts us in this current situation, because inflation is related to the monetary volume, to the mass of money in circulation. And with different money, we have an ability to have quite a real time. We know where money is, how much money is current in circulation. And the current system is really opaque. There is no transparency. There is no way to control it. That's why blockchain-based currency will be the future. 100% sure, but just come back to the basics of economics. Why do we put trust in our current money, euro? Why? Does anyone can provide any answers to that? Why? Why we provide a trust in our current money? And we know that the central banks doesn't have any commodities to cover and to have a ratio 1:1. So the basic criticism we have in Bitcoin is to say that there is nothing behind Bitcoin. Yeah, so I don't believe so. So Idriss and Joseph, you are both quite big Bitcoin maximalists, if we can say it. So how can we defend this theory that Bitcoin has a huge, huge things to be backed by something?
I start? Okay. Wow. Do you hear me?
Yes.
Yeah. Well, it's simple. Bitcoin is hard to get. And that's all you need to know. Bitcoin is hard to get. And Bitcoin is becoming harder and harder to get, time after time. From the source, it's harder and harder to mint, to mine, technically. And right now, if I want a Bitcoin, I have to pay much more than 5 years ago. And usually, as a hedge against inflation is something that's generally hard to get, and that people would desire in the long term. Now, that we don't know, of course. I can't tell you that people would desire Bitcoin in 100 years, because it's based on technology, and people would tell you, well, technology, of course, is volatile, and at some point it can become outdated. And of course, you've got some micro phenomena like vinyls coming back and stuff like this, but nobody can tell you if the technology of Bitcoin would make it desirable. You know, there is some kind of collector's value already. We've seen the behavior of some people buying just this Bitcoin. You know, the one with this chain of custody, this chain of ownership. I want this Bitcoin that was owned by someone. You've got some collectors. This behavior is happening already. So you've got some kind of numismatic to Bitcoin already, which nobody would have thought of. I mean, when they drafted the white paper, they would never think that at some point somebody would ask, I want this precise Bitcoin that's been in the custody of this and this person. But if I want to summarize, you check, my talk was about history. You check the old families, the old Italian families, when they were asked, how do you manage to keep your fortune, how do you manage to keep your wealth through Napoleon, through Charles V, through everybody, the invaders, the Arabs in Sicily and whatnot? They said, we abide to the rule of the 3/3. We save 1/3 in stone, so real estate. Of course, you're talking about those great families like the Borromeo, the Medici, or the Pazzi. They had Borromeo. They have this Isola Bella on the Lago Maggiore. It's a beautiful place. George Clooney has just a villa on Lake Como. Well, they have the freaking island in the center of Lago Maggiore. This real estate is stunning. So 1/3 in stone, 1/3 in gold, and 1/3 in works of art. For me, Bitcoin is crypto gold. That's why I'm a maximalist, in the sense that, again, I invest in other cryptocurrencies, but the cryptocurrency of last resort that I believe can be trusted in case everything goes wrong in the crypto world is Bitcoin. And to me, there is not even the beginning of a competition for that. In terms of that, it's not pre-mined, etc. So to summarize, Bitcoin is hard to get. And something that's hard to get usually can become a good hedge against inflation.
So for you, it's the ultimate form of money, in fact.
No, some people would tell you it's still gold. You remember JP Morgan saying gold is money, everything else is credit. And the problem is that gold is hard to move.
Yeah.
It's very hard to move gold.
And it's dangerous to move.
And it's dangerous to move gold. And it has some, so it's good for governments, for example.
Gold can be confiscated.
Exactly.
The government can take your gold at any time. And we think that we're safe in France, but I mean...
Yeah, any law could take your gold easily. That's true. So gold is good for governments because they can spare the expenses. They can pay for the saving of the gold. Fort Knox, right? If you've got the means to have Fort Knox, that's good. You should have gold. Government should have some. could be something else, could be palladium, it could be, but gold has this inherent stability because it's not so used in the industry, even though it has some industrial uses, but they're very minute. And so if you're a government, gold is great, yeah. But again, I mean, you see Salvador investing in Bitcoin as well because they don't have gold and they have other comparative advantages. So that's my take on it.
So it means that the new form of exchanging value and to protect it, we can use Bitcoin for that. But as a payment system on a day-to-day basis, we could suffer from the volatility. So do we think that the volatility could be reduced from time to time because of the dilution of distribution of Bitcoin, which allows citizens not suffering from any temptation of market manipulation? Does any of your investors at Tobam has already shown an interest for this kind of new gold, or it's just for you just a phenomenon?
So the investors at Tobam that look for the Bitcoin look for it for two reasons. The first one, it is that the Bitcoin is a diversifier. The correlation of the Bitcoin to any other asset is, on the medium term, insignificant. So it can be positive, but you know in statistics, you don't look only at the statistic, you look at whether the statistic is significant or not. In fact, the correlation of the Bitcoin to any other asset is non-significant, which means that adding a certain amount of Bitcoin to any other portfolio, if the amount is precisely computed, will reduce the volatility of a portfolio. So if you have a portfolio which is 60% stocks,
it's really surprising. You use a
no,
huge
like,
volatile assets to reduce volatility.
Yeah, it's like chlorine. You know, chlorine is a combat gas. It's very dangerous. But if you add 2 drops of chlorine in a glass of water, you will have drinkable water. And Bitcoin is exactly the same thing. If you put about 2 to 4% of Bitcoin in a 60-40 portfolio, it will actually reduce the volatility of a portfolio. So it means that you don't even need to be bullish on the Bitcoin in order to buy it. And in fact, it's not buying Bitcoin is a speculative bet in that case, because having some Bitcoins would reduce your volatility. This is the first actual reason for which some people are buying Bitcoins, some very large institutions. The second reason is, you know, if we go back to the topic of the roundtable, is Bitcoin a good inflation hedge? Anything which is real, which is not financially based, is by definition an inflation hedge. If you buy a car, it's an inflation hedge. Inflation is the loss of power of purchase of the currency. So if you want to hedge yourself against inflation, you simply buy something which is not a financial asset, but which is effectively a real asset. The best inflation hedge in history has always been equities, stocks, stock markets. And it's very funny if you look at this year, it's some kind of paradoxal that inflation is real this year, it's effective this year, and stocks are going down. How come? In fact, what is bringing stocks down is not inflation. It is the long-term interest yields. In fact, what matters is mostly the anticipation. If you expect inflation to be high, stocks are going to be high, to go up. The Bitcoin went up, art has gone up, real estate has gone up. Why? Because people knew that it's dangerous to hold euros or it's dangerous to hold US dollars. What has changed this year, it is the fact that the Federal Reserve has decided to increase its yield, and that has contaminated the long end of the yield curve. So what's happening today is not due to inflation, it's due to de-risking. Because if somebody gives you some return without a risk, why would you? But whatever happens, you know that at the end of the day, stocks, the Bitcoin, real estate, and art are going to benefit on a US dollar base of inflation. So in fact, if you look at the futures, you have 2 possibilities. The real problem is not the central bank. The real problem are the governments. The governments in the Western world are living above their means. Which means that, in fact, and you have a disequilibrium. And to restore equilibrium, you have three solutions. Either they are going to massively reduce their expenses, which is not going to happen. It's not the headlines today. Biden has been elected on the fact that he's going to increase his expenses by building infrastructure, etc. In Europe, it is the same. So first solution is probably not very likely to happen. Second solution, if you don't reduce expenses, you have to increase massively the taxes. This is also very unlikely to happen. If you have this disequilibrium between expenses and taxes that is going to remain, you have only one way out of it. It's to let inflation go.
So it means that the economy will continue to be sick. If we are
It
listening
means,
what you said.
no, you know, inflation is not good or bad. Inflation is simply a symptom. It's not good or bad. It's one way to restore into an equilibrium. At the end of the things are in equilibrium. So either you do it in an accounting basis, you effectively make equilibrium, or inflation will be here. And this is why my theory, my belief, it is that inflation has been here for years, but it was not an inflation on consumer goods, but an inflation on public expenditures, real estate, art, stocks, cryptocurrencies, etc. So inflation is here to stay until either we reduce massively public expenses or we increase massively taxes. There is no way out of it. Okay? Either reducing of expenses or massive increase of taxes or inflation.
And
which means
that's I totally agree with that.
That's what?
I agree with that. There are two ways to get out of that problem of inequalities. First, you increase inequalities by using Bitcoin and just keeping your property. The other way is to reduce inequalities by making taxes.
So you said that we have to take Bitcoin. We have to invest in Bitcoin?
Yeah, what I'm saying is, if you take property as something that as sacred, yeah, that's something that you would fit with the Bitcoin philosophy. The other philosophy is care about your neighborhood. Do you care about the person that is next to you? Do you believe this is a human being that is worth living, worth living in a good way? And that's the point. So if you're in a Bitcoin economy where the richest get richer, and it's exactly like today, it's just pure capitalism. If you continue that way, you will just increase inequalities and just make the poor poorer and the rich richer.
Okay, I think it's a very important thing you're saying. Okay, what is the purpose of money? If you look at Aristotle, he defined money as an object that has three properties. First one is storage of value. The second one is mean of exchange, and the third one is accounting units. But the real one that matters is the first one. It's because you can store value in money that it becomes a means of exchange, and it becomes a unit of account. So money is about really storage of value. If you go to Google, and you Google ECB mission statement, you will find on the website of the ECB that the only mission of the ECB is price stability. The ECB doesn't have any other mission, including the stability of the financial system. The stability of the financial system is not in the missions of the ECB. Why? Because those guys who invented the euro didn't understand everything in the beginning. And they knew that any other mission you give the ECB would come in competition to the first mission, would come at the expense of the first mission. If you give the ECB another mission, which is, fighting inequalities, salvaging the banking system, lending to the governments, it would come at the expense of the first mission, which is price stability.
But that mission
The
was
only mission of the ECB is price stability. Price stability does not mean inflation stability. It means zero inflation. Otherwise, it's not price stability. And as soon as we give, this is the theory of Friedrich Hayek. Friedrich Hayek says, in his book called Denationalization of Money, he wrote that as soon as a group of people benefit from the monopoly of money emission, they will abuse the monopoly in order to serve other means than the stability of prices. Why do we need stability of prices? I come from a country which has had a few episodes of hyperinflation. In this country, when you earn your money in the morning, you'd better spend it before night. Because the next day, the power of purchase of the money is 25% less. Try to develop a family, try to develop a village, a town, or a country in this kind of circumstance. The only mission of money is transportation of value across time. And whatever mission you give money, which is different from that, would come at the expense of this first mission.
So I think there's an important distinction to make between money and currency, right? Money is, you were talking, Idriss, about gold. And gold was used as a form of money and is still used as a form of money. But currencies have absolutely no inherent values, and they've been backed by gold until the 1970s. Until 1971, pretty much the world decided to drop the gold standard and started printing money, which is causing inflation, which is why we're discussing this subject today.
But yeah, talking about money, you had one question, which is, why do we trust our money? There are two things. First, price stability is part of it, which Bitcoin is not responding to, so it's unstable, so you cannot use it as a proper money. But that's another definition. The money is not defined by price stability. I know some people believe that, but it's not the actual definition. Store value is part of the definition, right? Another thing is it's also a unit of account. And Bitcoin is not a unit of account, except for one thing.
Yes, it is.
Except for one thing, for mining.
Means that you are able to measure a price of a goods or services with. You can do it right now. There is more than 10 million merchants accepting Bitcoin. But just come back to the roots that if Bitcoin and the underlying blockchain technology is not so good, why central banks are currently going to create their own digital money based on blockchain technology? So do you think, guys, that using blockchain technology and having this kind of ultimate form of money will allow central banks to get new tools to be better, to manage better the risk you have expressed? Do you think that we need to go to the digital euro or not? But we know it will come.
So I mean, you already have that in in China. There was a protest, I think, 2 weeks ago, where essentially a bank that was holding about $6 billion worth of money, they just went bankrupt overnight, and so all the people that were creditors went and protested in front of the bank, and the next day they got their health pass, their COVID pass revoked. The point that I'm trying to make is that if we have a digital currency, what happens, that's issued by a central bank, what happens is that the government has full control over you. They will know exactly what you spend your money on. So you'll have a great unit of account. It's going to be much easier to transfer money. It's going to be great, but not so much for your individual freedoms. If you're an enemy of the government, or if you disagree, if the government wants to persecute you, which happens every time, even in France, once again, we think we're protected. We're not protected at all. I think having a digital euro or a digital yuan, which is the money in China, which is going to happen very soon, is going to be absolutely catastrophic for freedoms.
Idriss, do you want to express something about the opportunity to
Yeah.
use this technology?
Well, there's a general principle that if you can suffer from it, you should have a stake in it, politically speaking. If you can suffer from any decision, you should have a stake in it, you know. And the monetary policy, the way money works, as a way to distribute trust among people, because money is crystallized trust, which corresponds to those three Aristotelian definitions that Yves Choueifaty gave us. The people should have more stake in money. So it comes with education, because the people doesn't know what money is for. What, you know, we're not educated in that. Even at school, we don't really learn. Now, in the United States, they have some courses of home economics where they, you know, we don't even have that in France. So we've got some kind of illiteracy regarding what money is for. And money is a power. It's way, way more powerful than a Congress or a parliament. And the people should be knowledgeable about it. But regarding confiscation, which is what you mentioned, yeah, when you control, I mean, with blockchain and where digital currencies printed by the state, it could create opportunities for fast confiscations. That's for sure. That's almost inevitable. So you've got a lot of leverage with digital currencies, but if and only if this is democratic, and the people should have like
Decentralized.
Yeah,
So for you, it's more a threat than an opportunity.
It's a new technology, so it always comes with threats and opportunities. The opportunities are huge. We could do a lot with it. And some centralized ones could be good as well. Sometimes you need a few, you know, you need to be able to exchange one currency from a centralized one to a decentralized one. They both have strengths and weaknesses. Now, I like Bitcoin because it's decentralized, of course. But in other situations, some tokens, you could be, in certain scenarios, you could be happy that they are centralized if the authority is trustworthy, of course. So, in the end, it's really about controlling the possibility of confiscation. And so far, we have absolutely no safeguards. I mean, you would have states saying, look, we're going to do that. You're not going to vote on it. You're not going to be able to say anything about it. And that, of course, I would advise against. And just also as an answer to Mr. Choueifaty's point, which is very good, but mentioning the statement of the mission statement of the ECB, and it's true, you can't serve many gods, you can't serve several gods, you must serve only this one, which is normally controlling the prices. But there's one aspect that central banks have failed to manage, which is negative money, that is debt. And the accumulation of negative money all around the world that nobody can repay.
It means that ECB pays commercial banks to distribute the money when it's negative.
That is negative money. I mean, that is, you owe something, it's negative money. When you have so much accumulated negative money, you know, like anti-matter, if you will, that is anti-money, right? So when you have so much anti-money accumulated, you give an incentive to the population to just drop money altogether and try to exchange with other means. Right?
And also, I mean, it goes against saving, right?
Does go against it.
So you know, I'm 33, and I know that my parents raised me as you know, you should save as much money as possible because you put it on your account and you're gonna get great interest. That's not that's not possible anymore.
It never intended to be, and that's one point. So why do we call it a currency? We call it a currency because it has to have a current. It has to flow. If not, it's accumulated in some pockets, which, again, is the philosophy of Bitcoin, and which I won't agree ever that it will be a proper currency or proper money for that reason, among others.
So what is the reason that it's not going to be currency?
Because it won't flow. It will accumulate in some pockets.
There's 200 million people that have Bitcoin wallets and that do transactions every single day. You can transact in one click 1 billion or $1.
Okay, let's just take one stat. If every banked person used the Lightning Network, they could only make 13 transactions each on the main blockchain.
But the Lightning Network is 1 year old. So it's a nascent technology, you know, of course.
But it relies on the first layer. But I don't want to talk too deep in the technology here, but the fact is that by design, the liquidity of Bitcoin was intended to be limited.
Yeah, 21 million Bitcoin.
No, that's the amount. That's the supply. I was talking about the liquidity. So it's just like talking about GDP when you're talking about the supply, the money supply. It's two different things. So
guys,
the money supply, yes, is fixed.
Sorry to interrupt, but the time flies. And now we'll need just to finish. And I expect just from all of you, just 3 sentences regarding these topics. If people need just to keep an idea from your own opinion regarding this debate, what it will be?
Okay, I would say, I would go back to what has been said already. I believe Bitcoin, on my side, the wrong question is whether the Bitcoin is a currency or a money or not. Bitcoin is an asset, okay? The fact it's a currency or a money depends on the definition, and the definition is always, or most of the time, a definition is subjective. So Bitcoin is an asset. And this asset, shall it protect you against inflation or yes or not? I think I should not say that because I'm scientific, so I should always be full of doubts. But I have very little doubt that stock markets, real estate, art, and the Bitcoin can protect you against inflation. Okay? I really believe the wrong debate, euro is here to stay. For many years, we still have euros. For many years, we'll have dollars. Okay? I also kind of disagree with you, Idriss. I believe that even if you have a Bitcoin economy, you will have IOU on the Bitcoin. Okay? So IOU also is here to stay.
There's too much of them. I don't say...
Okay, too much or not.
Yeah.
The market should regulate that. You should have a spread on the issuer of the IOU. And this should solve the problem of too much or not enough IOU. Okay? So the dollar is here to stay. The IOU is here to stay. The euro is here to stay. I am not an economist. I am not a politician. I'm an asset manager. And the question I want to answer is whether I should own Bitcoin or not. From one point of view, which is a diversifying point of view, I think really it's very difficult to question the fact that you should own Bitcoins. On my side, I really very much doubt the capabilities of central banks to fight inflation if they don't solve the primary problem, which is a disequilibrium between public expenses and taxes. Okay, they are not going to be able to solve inflation if they don't solve this first problem. And they are not going to solve this problem in my mind, which means that inflation is here to stay, very probably. And if inflation is here to stay, you'd better own something which is rare, like real estate, like the stock market, or like the Bitcoin. The last adverse scenario of the Bitcoin is regulation. There is a common belief that regulation could really stop Bitcoin. On my side, I have never seen, I don't have in mind any example of a technology that works that could be censored on the long term. We have a problem in Europe, and especially in France, which is that very often when there is a new technology, we try to guess whether this new technology is good or bad. In the US, when they look at the new technology, they don't try to guess whether it's good or bad, but they try to guess whether it works or doesn't work. The Bitcoin works.
And how they can make money with.
Yeah,
like
and as soon as you can, and it works, they try to take advantage of it. And in history, there is no example of a technology that works that can be censored on the long term. You have two kinds of governments on this planet. You have governments that believe they are at the service of the people, and you have government that believe the people should serve them. And the two, in a very caricatural way, I would say, the Chinese government believe they know what is good and what is bad, and the people should abide by the rule of the party. In the US, the intention is the opposite way. This is why I very much trust that not only the Bitcoin will survive any kind of censorship, but I believe that in the US at least, they will not even try to censor it.
So, if we can resume that for you, it's not an answer, is Bitcoin a good authentication? It could be. It could be or not, so it depending on the situation. And for you, Idriss, if you have an answer, it's yes, obviously, I think.
Yeah. For me, definitely, the fact that you hold a Bitcoin has only gotten better and better. If you just take a, step of 4 years, right? If you just abstract the scares, the legitimate scares of 2017, and it was 17,000, and suddenly it went back to 3K. But there's not been a single situation in the chart of Bitcoin where in 4 years, wherever you bought, even if you bought at this abstract top of 2017 where it was 17K, even if you bought at this moment where you were the greater fool, you were obviously the greater fool, and you were so much the greater fool that Nabila, who was a reality TV star, was advertising people to buy Bitcoin. So it really told you that you were the greater fool. But even if you had been the greater fool in 2017, if you had waited 4 years, you would be breaking even. Actually, you would be making money. I know very, very little financial instruments that offer that offer this kind of track record that if you're able, of course, psychologically, it's completely abstract to say anybody would be able to abstract 4 years and not be scared by how much money they've lost virtually and everything. But Bitcoin has this capacity, and of course, it should be invested in a reasonable ratio. And Yves Choueifaty has made a very good point, saying it's like chloride. Even if you're conservative, just put a few drops in your portfolio, it's going to sanitize it. This is an excellent metaphor. But what I wanted to add, and where I would disagree, is that my generation distrusts governments very much. And our level of distrust for governments has been reported by so many polls, the Pew Research Center, you name them, all the pollsters, they've confirmed that our generation really distrusts governments for so many reasons that we could not elaborate on right now. But since we distrust governments so much, I wouldn't bet on the euro as it is being here in 30 years, for example. Something else would be here, centralized money would be here. Yeah, well, 5 years is already a lot, right? But it's not a bet my generation wants to make. And we want to edge ourselves against the fact that governments are not trustworthy anymore. And Bitcoin has become one of those symbols. And we should, of course, to conclude, we should avoid being too confident in it. We should avoid any excess. Look, like we're this kind of hippie generation, cypherpunk generation. We want to live off the grid, completely away from government. This is how most maximalists would think. Now, again, I advise against that. But I have to admit that I don't know a single government, and I've been advising governments. I'm a government advisor. Like, I've been speaking in front of the central bank of
Tunisia. Do you advise them to get Bitcoin?
Of course I do. Of course I do. But I don't know a single government that would be worthy of my absolute trust. And that's a problem. And that's why Bitcoin exists.
So it's a second huge yes. And for you, I expect that there is no such specificities that you would like to highlight, but I think you will say yes again.
Yeah, definitely yes, and I'll be super fast. But because of government, monetary policies, every single year, your purchasing power is less and less. And I think Bitcoin should absolutely be part of a well-balanced portfolio, along with gold and other precious metals and stocks as well.
Thank you, sir. The last but not the least.
Is it an inflation hedge? I would say it depends on the central banks. If the central banks decide to have another policy, monetary policy, it may drop the Bitcoin price, not to zero, but I don't believe it will ever be zero. But I believe it will be much more, it could be, it may be much lower than it is today. So is it a good edge, an inflation edge? Really depends on the central banks.
So it's a no for you.
If central banks do their job properly in ensuring price stability, no.
If there is no inflation, it's not an inflation hedge.
So thank you so much, guys, for this topic. Thank you so much. Please raise your palm for them. I hope now it's more clear for you. We provided some few economics, finance, social impacts, and now you have to make your choice. Thank you so much for your attention. Don't move. A really interesting keynote will come just after that to bringing back trust. We spoke about that, so it's perfect. Thank you so much.